Moving on now, and it's time to get a look at the markets. Wednesday of this week, I was joined by UNL livestock economist Elliot Dennis. We had a lot to discuss, including summer meat demand and projected Chinese exports, but we began by discussing the most recent cattle on feed reports and recent grain rally.
And there's really two things to remember of why the grain rally really took place in the first place. First has been kind of unprecedented buying from the Chinese and really the export markets in general. And the second has been a really low stocks to use ratio. Essentially, that's like our buffer throughout the year, and we were historically low on the stocks to use ratio. Then when USDA came out with their planning projections, essentially what happened was the market was expecting much higher planting rates on corn and soybeans than the USDA actually projected. And what that tends to do is raises the grain prices in the short run. That incentivizes producers or farmers to plant more corn. Right now we're going into the prime planting season for corn in Nebraska. And so what I would expect is that in the next planting report, USDA will come out and show that a lot of people more planting. And what we'll see is that the corn price is really high right now, but throughout the summer it will come back down. And I don't expect corn to be this high going forward. That being said, if we have continue to have potentially a drought that moves through, then we could see that price be elevated. But for all intents and purposes, it seems like this is pre-planting expectations. We're going to see more plantings, and then the corn price should come down.
We see a lot more placed cattle in the cattle on feed report on Friday. How is that going to impact processing?
Yeah, so I mean, processing is pretty tight right now, because we had a lot of front-end supplies with the expectation that people had the greater availability for the vaccine. States were starting to ease up on their quarantine and masking restrictions. And so what happened is the livestock feeders were placing cattle with that expectation. There's just a lot of animals on the market. If you've been watching anything on the exports, Chinese exports of beef are sky high. And so just a lot of pressure on that right now for animals to be harvested. One thing that we were expecting going into 2020 was that we're going to have tighter supplies, which means processing capacity wouldn't be as a constraining factor. But really what that's done is just shifted the herd contraction into 2021 and into 2022. So I would anticipate that processing capacity is going to be pretty tight for the next 3 to 4 months as we continue to work through the summer. Domestic demand is really, really strong for beef right now. And so there's going to be a lot of pull from the consumer side, both domestically and internationally, to pull up cattle quickly. And that's going to really tighten processing.
So with the shifting markets, China's still rebuilding its hog herd. Recently, the USDA placed a possible projection of 10 million pounds of pork by 2030 to China. How does this impact our exports, imports, and our producers here locally?
Yeah, so China is obviously the big player in the pork market right now for two primary reasons. First, there's just a strong demand for pork products in China. There's a large taste preference for that. And second is, of course, we have African swine fever, commonly referred to as ASF. Those efforts to rebuild the sow herd has largely been successful. They still struggle a little bit with the piglets. PRRS is a big problem right now, and ASF is still problematic. But what we've seen is that as they've had success in rebuilding their sow herd, piglets and sow prices and pork products in general have started to come down in China, which has really lowered our exports. And when you look at 2021 exports for pork from the U.S. to China, it was all-time highs. And so what I see for pork products moving forward is that really China is going to play a major role, but as they build that herd, that demand is probably not going to be as strong as it was in the past. And so really it's looking to make sure we have as many markets we can ship our pork products to in general. Germany, for instance, it also has issues with the ASF, and so even though China may be going down, Germany is opening up now for pork products, and so I think it's a great time to be a pork producer. Pork cutouts are at pretty much extremely high. They're about $1 or 114, and so it's pretty incredible where we're at, and we have tightening supplies in the U.S. So very, very strong for pork producers, especially here in Nebraska.
And before we let you go today, do you have any marketing or risk management advice you'd like to share with our viewers?
Sure, yeah. Every time I'm on here, I always like to talk about risk management because I think, and if we're taking a long-term view on both our operations and our financial viability, risk management has to be a part of that conversation. The past couple years has really shown us that we don't know what the market's going to throw at us, and so risk management essentially mitigates a lot of that uncertainty. This year it's the grain rally with China and the low stocks-to-use ratio. Last year was COVID. The year before that was the flooding and the Holcomb fire. No one could have predicted all of those, but some basic risk management strategies can really help producers maintain a certain level of profitability. Two most common strategies is just take out a put option from CME, sets a floor on where the lowest price you're going to receive minus the premium that you pay for that, or just USDA's livestock risk protection program. The USDA has greatly subsidized that. Upwards about 45% of the premium is paid by USDA. So especially for producers who are tight on operating capital, risk management is almost a must to continue to operate in an increasingly volatile world.